Hi everyone, let's talk about multiple time frame analysis. Multiple time frame analysis is a tool that you can use in your trading. I would say it's an absolutely essential part of trading the stock market. If you are finding that you've been applying a strategy which is one-dimensional, what I mean by that is you're getting in and out of the market based on some indicators on one time frame only, you're going to find that it doesn't work and you're going to lose money. I've been through all of these things, everything that you're going through on YouTube, trying to find videos on how to trade. I want to assure you that if you do not use multiple time frame analysis, you probably will fail and you're just going to waste your money. So let me explain to you what multiple time frame analysis is and how it can help you get a much better win rate in your trading. So let's suppose you want to make an entry on the US 100 on the NASDAQ, and you can see here I've drawn some support and resistance levels. There's one here, it's touched it quite a few times. You can see all the candles that have touched it here, here, and then it broke out of this level up here. So if you want to understand about support and resistance levels, there's another video on my YouTube channel. It's within my full learning playlist, how to become a stock market trader playlist, so you'll find it in there. So let's say this is your breakout level and you're waiting to place a trade here. What you can do, you want to use a higher time frame as your bird's eye view and a smaller time frame as your trading time frame, and something that you use to decide on a more detailed level where to get in and out. So let me just emphasize this because this is something that new traders can struggle with. I've seen it before. So basically, let's say you're waiting per your higher time frame. You've got a solid structure here from which you're going to make a breakout trade here somewhere, and you can see this is a really solid level on the daily time frame. So what you have to bear in mind is if you get in here, you're not waiting for your profit to go all the way up here, because this is just your overall structure that you're trading within. Your profit target should not be miles up here per this time frame. You need to set your profit and stop loss parameters on the lower time frame. So you're really just using this larger time frame to understand what the shape of the pattern is on a bird's eye view and where to get in and out. You don't want to. The idea of multiple time frame analysis is that it can stop you from running into obstacles. You don't want to run into a wall that's part of the solid structure on a higher time frame like this. You don't want to get in here and then expect to take your profit here, because you're going to bash into this wall on the higher time frame, and it's just going to come back down and stop you out probably. So it's really important to be aware of these big levels and the overall pattern that you're trading. You can go down a few time frames away from the bird's eye view time frame to make your trades. Don't make them too far apart. In the end, the way you're going to see this is you're going to see all of these time frames as just one big picture, and it's going to click in your mind how they all fit together. So let's dip down and look at the smaller time frame. I'm going to explain what I mean. You've got a bump here, for example, preceding the entry point, and another bump here. So let's look at what they look like on the 30-minute time frame. It's all part of the same pattern, and you can see when you start doing multiple time frame analysis, you can see that it's all the same thing, and what you're doing is just zooming in to get a better angle. So the entry point is around, actually put a little note here so we can find it. It's around the 23rd of June. So let's go to the 30-minute time frame, which is a good time frame for beginners. It's not too slow and it's not too fast. You want to avoid doing really fast time frames when you're learning. So we said it's around the 25th of June. Is this it? Here we go. Entry. That means it's a bit stretched. Pull it down. Okay. So what we're saying is, you can see here now, if I just zoom out, I said to you that there was a preceding bump prior to the entry point. So you can see them now. This is the bump on the daily time frame. It's all just one big thing, and once this clicked in my head, it was just so much easier to understand what I'm doing and what I'm looking at in the markets. So the point is, you now know that you've got these solid structures per the daily time frame that can be seen on the daily time frame. So you know they're solid, and you're planning to make a breakout trade once it goes up through this. So this is where you can use the smaller time frame to plan your entry and exit. So for example, you know, once it's passed through here, you might wait for a pullback and then get in again, or some people get in straight away. You can have false breakouts. I'm not a breakout trader, so I'm not an expert on that, but for example, you know, your entry might look something like this. You know, it's quite a high profit target, you see. So when I said, you know, if you've got like 1.6 or 1.5 times your risk, I know that breakout traders get quite a lot of money from, compared to their risk. Their risk to reward ratio is quite high. You can understand about risk to reward ratios on my YouTube channel. I've got another video about managing risk and everything on there. So, you know, this would be a good trade to place. There's nothing wrong with this type of trade. But what I mentioned to you on the daily time frame is that you're not expecting your trade to go all the way up here as a profit target. The point is, all you're doing with multiple time frame analysis is understanding what the parameters of the solid structure is from the bird's eye view, and making sure that your trade is cooperating with that, it is consistent with it in terms of the entry point. You're getting in at the support on the major daily time frame, and setting a stop loss and target based on the smaller time frame. So the idea is you're just nipping in and out really quick to make a profit there. You're nipping in and out really quick here, and then you're out of the market. You're not waiting for it to go all the way up here. You could put a trailing stop, but the idea is, you know, you want to trade the solid structure, the structural pattern. Make sure your trade fits within that pattern and is complementary of that pattern. You don't want to get in, you know, as I said, trying to think of a bad example where you would get in. You don't want to enter the market here and it's going to smash into this wall and come down. And that is basically what happened there. You can see this would be a bad entry point. So this is why I mentioned that if you are just trading a one-dimensional time frame, you're just going to waste your time, because these types of scenarios, which you can't see on the lower time frame, are important. They're going to stop you from getting a good win rate. You have to avoid these. What you're doing as a trader is, especially when you become more and more experienced, you are eliminating bad entries. You're swerving the ones that lead to a poor win rate. And as you become more accomplished as a trader, you're going to place fewer trades because you're being more picky. You might say, right, this is not the right place. It might look good on the smaller time frame, but I can now see on the daily time frame with my multiple time frame analysis that this is a bad place to enter. So I'm waiting. I'm going to wait for it to pull back to here, for example, and then I can get a little trade in here before it hits the next level. So you're just trying to avoid obstacles and use it as a complementary thing to help you. If you can get in at an entry point per the daily time frame within the smaller time frame, this is perfect. But you can also use it to avoid unhelpful entry points. So I hope you found this helpful. If you've got any questions about your trading that I can help with, I'd love to help you. You can contact me on my YouTube channel or leave a comment below. If you thought this video was helpful, it would really help my channel to grow if you could give me a thumbs up and subscribe to the channel. It will help me to set more time aside for making videos like these to help you with your trading. So thanks a lot, guys. I hope you found this helpful. Right, bye.